So now we are partially done with our financial statement for Amazon. The only thing that is left is this basic earnings per share and the diluted earnings per share that is going to be based on the weighted average shares used in computation of earnings per share. So we're going to be determining if there will be any ongoing funding requirement for Amazon. That's going to be based on its cash flows. So if Amazon's cash generated from operations, after taking into account the cash that will be used in investing activities and the opening cash balance, if all of that put together results to a negative cash flow, then we will analyze if Amazon will then need any funding requirements such as issuing bonds or stocks. So that's exactly what we're going to be doing next. So if this company will be issuing bonds as a result of that, or they're going to be issuing shares as a result of that to raise capital in order to fund for the operating activities and its long-term obligations. So let us go further to estimate if there will be any funding shortfall as a result of this analysis. So let us move there. In this case, we're going to go back all the way down to our debt schedule. Recall that we had this section for additional capital requirements. We had a schedule, a separate schedule for that. And here we have the cash and cash equivalents at the beginning of the period. And then we will add to that the net cash provided or used in operating activities. And also, we will deduct any cash that was used in investing activities. So the result of all of those will result into a funding shortfall in case if there will be a negative cash flow. Then we will estimate if Amazon will need to raise debt. As we can see, we have an additional schedule here for any additional debt that will be raised as a result of that, or any additional equity that will be raised as a result of that funding shortfall. So let us go to the financial statements right now and bring in the cash and cash equivalents at the beginning of the period. So let us go to the cash flow statement and let us grab here the cash and cash equivalents at the beginning of the period, approximately $42 billion for this time period. And let us also grab the net cash provided or used in operating activities. Let us go to the cash flow statement. And let us grab here the net cash provided or used in operating activities. We have it right here. Let us also bring in the net cash provided or used in investing activities. We still find that in the cash flow statement. So any cash that was used in investing activities. So in this case, the only cash that was used in investing activities was to purchase property, plant, and equipment, including internal use of software and website. So we don't have any ongoing proceeds from property, plant, and equipment incentives. We don't have any acquisitions net of cash acquired, and also any sales and purchases of marketable securities such as treasury bills or blanket acceptance or commercial paper. So we don't have any of those investing activities except for the purchase of property, plant, and equipment, including internal use of software and website. So we will see how this will ultimately impact the funding shortfall. As we can see, this is the only cash that was used in long-term initiatives, that is for the purchase of property, plant, and equipment, internal use of software and website. Approximately in this period, we recorded $29 billion. So That's it. So what we're gonna do next is we just want to sum all of this just to demonstrate if there was any funding shortfall. As you can see, we have a balance of approximately $63 billion. So since we know there will not be any funding shortfall, what we're gonna do is we're just gonna fill this all the way to the end of the projected period. And as you can see, it keeps increasing to the end of 2031 of approximately $613 billion. So Amazon will not be requiring any funding shortfall going forward based on this analysis. So in order to make this more dynamic, so we're gonna hit F2 and we go back here and we make sure that we grab here the minimum of 0 or this amount. So what we are saying essentially here is that if there is any funding shortfall, let it give us 0. Otherwise, let it give us the sum of the cash and cash equivalents at the beginning of the period, the net cash used in investing activities, in operating activities, and then we deduct the net cash provided or used in investing activities. So that's exactly what we are saying here. So if there was any negative cash balance, that will be reflecting here. So we have that in place. We can make sure that we close the bracket 2 times.